Hi, welcome to the training. My name is Singh. Today I'll be covering the CRV advanced settings, and also we'll cover a little bit about the tax settings, okay? Especially if you're a food vendor or you're using this as a restaurant app. We'll cover that here. So here I'm on my web cart and we'll go ahead and log in here. This is my order form here with my menus. I'm gonna go ahead and log in to the dashboard here. So I'll put in my admin password. Okay, and we'll log in there. Try that again. Okay, here I will navigate to the menu module. So my screen is a little bit minimized so that you can see everything clearly in the video. If you're using a desktop version, the items will appear on the left side. So if your screen's a little wider, I have to compact this so that it would look more clear. Okay, so we're gonna click on this very first item here. We're gonna choose edit. And it's gonna bring us into the edit mode here. So this is the pork belly plate here. And you can see here I have the prices. This is the small price, medium price, large price, and we have CVR's field here also. So CRV, I'm sorry, are the California redemption values. So usually that applies to beverages such as canned or bottle sodas or carbonated drinks. Okay, there's a CRV on it. So if you're in Oregon, Oregon has their own Oregon redemption value as well. You still use the fields here for that purpose as well. Then you have the tax rules here, okay, with different options. Okay, I have it set to always taxable right now, and we can go into the more detail, and then you can input in description, etc. Spice level, dietary, allergens goes with. Also, I'll explain some of these fields in a little bit, but let me open up Notepad here. Okay, so one of the main questions that we've been getting is about taxes. Okay, so the first thing to cover is we are not tax attorneys. Okay, so you want to consult your own tax attorneys and you want to consult your own accountant for setting these rules. Okay, the application allows you to set them, but you really want to consult them. Okay, so this is just a general information that we're giving you here to help make it a little bit more understandable. Okay, so in California, especially in California, we have the 80/80 rule. So this applies mainly to food sellers. Okay, so what is the 80/80 rule? The 80/80 rule is where it determines if an item, a food item, especially cold food items and cold drinks, are taxable or not. Okay, so for example, it has to meet these two rules. More than 80% of your sales are food products. Okay, that is the first test. The second test is more than 80% of your food product sales are taxable. Okay, it sounds confusing. It's actually not. It's easier to understand than what most people think if you just kind of familiarize yourself with the rules. Okay, and I'll try to explain that in one go here. Okay, so if you're for a lot of food seller out there, your question is usually is where let's take for example McDonald's and Starbucks. Okay, they tax everything. Okay, because they meet the 80/80 rules. Okay, so they tax everything. As a small, let's say you're a small boba vendor. Okay, it might not apply to you. So the way you tax your customer, it will be different. Okay, so the very basic rule is this. Okay, so in California, the very basic rule is cold food So I'm gonna just go to go is generally not taxable. Okay, and let's make that a little bit bigger so that everybody can see it here. Yeah, let's make it a subheading here. Okay, so this is the general idea here. Okay, so co-food products sold to go is generally not taxable. Okay, so for example, if you're selling cold sandwiches, smoothies, milkshakes, salad, and etc. They're not really taxable, but there's a big but in there though. Okay, but then okay, there's the big but goes here, but then there's the 80/80 rule here. Okay, so those co-to-go items, they can be taxable if you meet these conditions here. Okay, so this is where it gets a little bit more confusing than what most people tend to understand. Okay, so they could be taxable if you meet these two conditions here. It's called the 80/80 rule. Okay, so if more than 80% of your sales are food products and more than 80% of your food product sales are taxable. Okay, so I'm going to give you an example here. Okay, so let's say the first test, we'll put a 1 here. And let's see if I can make this a little bit bigger so that you can be easier to see here. Okay, so let's say this here. Let's say, let me put this here. Let's say you sold you're a boba vendor, okay, and you sold a total of $100,000 in sales, okay. Let's say total sales, okay. Now, let's say 90,000 of those are food, okay, and I'll make that a little bit larger there, and let's say 10,000 are non-food items, okay. So let me make that a little bit bigger there so you can see it, okay. So in this example here, you sold a total of $100,000 in sales. 90,000 are food, and 10,000 are non-food items. So non-food items are things like balloons, maybe gift items, and etc. Bobbleheads, toys, and etc. Okay, and you sold that on the side. Okay, so in this example here, okay, we can see that 90% are food. Okay, and make that a little bit bigger there too. Okay, so 90% are food. That passes the first test. Okay, now let's go to the second test here. Okay, so the second test, you have to take that 90% or that 90,000 in food, and is it 80% of that of the food product sale, are they taxable or not? Okay, so let's take a look at that here. I'll put a second test here. Second test, we'll put a number 5 here. Okay, so we're going to take our food sales only. Okay, that $90,000 in food there. Okay, and we're going to say, okay, how much of that were taxable food? And in this example here, I'm going to say about 80, let's say 85,000 are taxable food. Okay, and so that leaves you with $5,000. So you have $5,000 are non-taxable. Okay, let's say taxable, and let's make it clear. Let's say they're co-food. Okay, I'm gonna make that bigger so you can see it. Okay, so the second test, you take your food item there. Okay, your $90,000 of food sale, okay, for the second test, okay, and only $85,000 are taxable food, okay. The other $5,000 are non-taxable co-food, okay. So co-food are like sandwiches, tea, cold drinks, and etc. Okay, so if you calculate this here, okay, it is about 94, yeah, 94.4%, okay, taxable, okay, taxable food. Make that a little larger so you can see it. Okay, so if I calculate that out, the 85,000 taxable food out of the 90,000 it's about 94.4% taxable food. That is more than 80%, okay, of the food product sales, okay, that are taxable. So that means it passes the second rule also, okay. But there's another but here though, okay. Now in California, restaurants cold food sold to go, okay, in a suitable let's say in a way, if even if it's a cold food item that's sold to go only, uh, if it can be immediately consumed, then it can also be taxable too. So there's a lot of little quirks in the rules there. Okay, so if you sold something that is a cold food item and it's your customer eats it there, then you can tax them. But if it's to go, it's not taxable. But then California also has that little quirky rule there where if it's sold to go and it's a cold food, but it could be immediately consumed or eaten, then it can also be taxable too. So there's little quirks here and there. So this is the part where you, as the business owner, you have to make that decision with your tax attorney or your accountant and decide whether or not you want to tax your customers, okay, based on those particular conditions there, okay. So even though if you pass the two tests, or they call it the 80/80 rule here, okay, there are certain quirks there where certain items, especially cold food and cold drinks, okay, can be taxed also. So, oh, my apologies there. The truck just went by. Okay, so there are little quirks here and there to kind of look out for. So let's now that you have a little bit more understanding on how cold items and cold food are taxed. I'll give you an example of McDonald's. Okay, so McDonald's, they normally charge tax on everything. Okay, and this is where you might look at McDonald's as an example where they charge for everything. They tax for pretty much anything: cold food, hot food, cold drinks. They will tax it. Okay, but you might say, well, then shouldn't I just go ahead and tax everything then? Well, it doesn't really work that way. Okay, you have to meet these rules, and McDonald's, they actually do meet these rules. Okay, so let's I'm gonna explain McDonald's example, and then we'll move on to something else. So ordinarily, non-taxable when sold to go, it can be taxed, okay, if it meets the 80/80 rule here, okay. So for example, in McDonald's, okay, they can track, and if you qualify, or the item is qualified as a cold food sold to go, Okay, you have to document that separately. Okay, if you document it separately, then the sale can remain non-taxable. And there's another quirk there as well. Okay, so the 80/80 rule in general here, yeah, they would in general terms of understanding. Okay, some might say, well, then you could charge tax on every co-items. Then, well, only if you meet that 80/80 rule, and if your co-to-go sales are taxable, unless you separately account for all the qualifying co-to-go sales. Okay, so those are the little quirks that you need to kind of pay attention to and kind of understand. Okay, now let's go back to our example of your little boba vendor. Okay, so in your boba vendor, you sell milk tea, fruit tea, I don't know, smoothies, bobas, and and maybe some snacks. Okay, like pastries, etc. Okay, but everything's to go. Okay, but if you don't have tables and chairs or a place where customers are consuming the food, okay, it's different from McDonald's because most McDonald's actually have a place where customers can sit and eat. Okay, California also has little other quirks, such as, for example, if you're a mobile food vendor, per se, okay, and you have cold food products, okay, that are not generally taxable, okay, and there's a little warning in there though that the 80/80 rule can apply depending on the circumstances also. So you really have to kind of go over that with your tax attorney or accountant. Okay, and I can't stress that enough. Okay, now there's another little quirk to the rulings also. So this is for if restaurants. What I cover here is mainly about restaurants and food vendors, but I haven't touched about caterers. Okay, so in California, caterers generally, okay, have no on-site eating facility. So California concluded that the 80/80 rule, it doesn't really apply to caterers. Okay, so just kind of keep that in mind. Okay, so you can't really say if you're a small business, no tax. Okay, or if you're a big business, tax everything. You can't really apply that to every situation because every situation is a little bit different. Okay, let's take another example. Let's say Starbucks. Okay, so Starbucks sells a mixture of things. Coffee, tea, cold drinks, food. It sells pastries, sandwiches, etc. as well. Okay. Now, some beverages are taxable regardless of the cold food rules. Okay. Now, this mainly pertains to cold food and cold drinks. Okay. So, for example, if you have carbonated drinks or sodas, they're always taxable. Okay, whether your customer eats it, or drinks it there, or is to go. Okay, so just kind of remember that. Okay. Now, Starbucks have physical locations with facilities for customers to kind of eat their food. Okay, so you're kind of dealing with a little bit different than you're just a guy selling boba drinks from a small street setup. Okay, you're in a different category there. Okay, so to give you a rundown of this, the 80/80 rules and the co-food, co-drink, are they taxable? Are they non-taxable? Here are some mental models to kind of use when you think about it. Okay, don't think that if you pass the 80/80 rule, you can tax everything. Okay, don't don't go with that. Okay, look at your situations. Calculate, your your sales, if more than 80% of your sales are food products, and more than 80% of your food product sales are taxable. Okay, are they taxable? Okay, so the normal situation is cold food to go. Generally, and I have to really stress on the word generally, no tax. Okay, there's not a tax on it. So some people might ask and say, well, what's the difference? If should I just tax it? If I don't understand it, should I just tax somebody? No, you can't do that because you're overtaxing them. Some of the tax laws out there does state if you overtax your customers, you have to return that or you have to remit that payment to the state. Okay, so you can get into a lot of trouble. So best advice: seek a tax attorney or seek some advice from your accountant. Okay, here I'm just giving you some general practice and general ideas. Okay, we are not tax attorneys or we are not certified accountants. Okay, we just been doing this for a long time and we understand some of the rules here. So we apply that into the application for you to, as the owner, you set the rules. Okay, so the part of the rundown is a normal situation, cold food. I'll type it here so you can see it. Okay, so normal situation. Okay, and these are the kind of key ideas to walk away with from this training here. Okay, cold food, and is let's say it's to go. Okay, generally, okay, I have to really stress that generally there's no tax on it. Okay, and it's no tax. Okay, there are no tax to it. Okay, that's the general idea. Okay, restaurants, if you meet the 80/80, but separately account for your co to go. Okay, so if you have qualifying cold food to go, it can remain non-taxable. Okay, I'm gonna type that here so you can. So qualifying, let's say cold food, such as like cold food are like sandwiches, cold drinks and etc. Okay, to go, generally, it can be. Let me dot that. It can remain non-taxable. Okay, I think that's one whole word. Let me highlight that there for you. Okay. If, for example, then now this is for like if you're like a restaurant. Okay, so hot prepared food. Okay, let's go with the next one here. So hot, if you have hot prepared food, and it's to go, and let me put some dashes in a plus there. Okay, it's to go. Normally it's taxable. Okay, make that a little bit bigger there. Okay, normally it's taxable. Okay, food consumed at let's see here. Let me make another. So you have food that are consumed at the restaurant. We're gonna put some dash here. They're usually taxable. Okay, so the one of the main I guess you could say divider is either the customer eat that food at your place of business, or do they take it and go eat it somewhere else? Okay, that's where the to go and the dine in. In our application is called dine in. Okay, so normally food consumed at the restaurant, there's a tax to it. Okay, it's taxable. Okay. The other thing to kind of remember is, and especially in California, is soda and carbonated beverages. Okay. I'm gonna put to go here for right now. Okay. Uh, Normally it's always taxable. Okay, for sodas. Okay, and let's make this here. Okay, so soda, carbonated beverages. Okay, the key word is carbonated. Okay, so kind of keep that in mind. Okay, carbonated beverages to go is taxable. Okay, this is the normalcy of it of this particular item here. Okay, there's also a CRV, and we'll cover that in the app. Okay, so if you were to walk away from this training here, just understanding these concepts here, okay, then you had uh, probably gained something. Even if you don't understand the 80/80 rule, uh, just kind of generally understand this part here, and I think you would benefit from this training here. Okay. Now you want to I want to kind of clear something up a little bit. Okay, so even if you are a small vendor, okay, and it is sometimes it seems like it might or might not be favorable to you. Okay, so when I talk about a small boba vendor, okay, more likely to be no tax. Okay, it depends. Okay, there are those big quirky rules out there. Okay, so what you always want to do is look at the restaurant, fast food, mobile operation, um, and ask yourself what part of these rules does it cover. For example, caterers, the 80/80 rule doesn't apply to caterers. Okay, so does it have a place for customers to consume food? Okay, do you have a place, wherever you're doing business at? Okay, what percentage of your sales are food? What percentage of those food sales are taxable? And that is the 80/80 rule there. Okay. Okay. Does it separately account for qualifying, let's say, go sales? Okay, are you able to separate those sales? Okay, those are the different types of determinations for you. Okay, so there, I wouldn't just say, okay, it's either a yes tax or no tax. Okay, on especially the cold food, because it depends if they are eating the cold food there or they are taking it to go. Okay, so for example, if they purchase a sandwich from you, okay, a cold sandwich, and they're taking that sandwich to go, generally there's no tax to it. But if they are eating that cold food and dining in at your place of business, and you have set up tables and chairs, then it's taxable. Okay, so I kind of remember that there's little quirky rules there. Okay, so for California restaurants, I would probably say the business setup in general, okay, is where the tax situation differs. Okay, is it a standard restaurant with tables, chairs, eating utensils, and everything, or is it like a takeout mobile vendor? Like if you're serving everything out of one of those boba drink trailers or taco trucks is what the normal term is. Okay, then you can kind of look at the 80/80 rule and see what would apply. Okay, so it's separate accounts for go food, um, and how you set up your menu. Okay, so if you understand these general ideas here, then it'll give you an idea on how to set up your menu inside the app so that it can automatically um, take care of some of these issues for you. Okay. All right. So enough of this here. I hope you understand some of the California rules, and it differs in other states. So I'm just covering the California portion of it. Okay, but Once again, if you were to walk away just understanding this part right here, okay, then you would probably gain something, um, some 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 general knowledge on how cold food and cold drinks and soda and carbonated beverages are taxed, and are they taxed or are they not taxed? Okay, so understand this, and I think it'll benefit you. Okay, so I'm gonna hop over back to the app here. Okay, so now that we covered all of that, okay, so let's take a look at there here. Okay, so I have my pork belly here on my edit menu here. Okay, so you can see that this is probably like a hot plate. Okay, so I can set the tax rule here to always taxable. Okay, it's a hot food item that's prepared, always taxable. Okay, I can set it to that. Okay, once I've done that, I can go to the bottom here and say update item, and it's going to automatically update the item, and it's going to remove it from my edit options here. Okay, so let's go to a soda or a cold drink down here. Okay, so soda, for example, such as Coke here. Okay, these are always taxable. Okay, so soda, carbonated drinks, they're always taxable. But there's a CRV in there also. Okay, so the CRV is the key here. So let's click on edit here on the cold drink here. Let's bring that to our edit here. So it pops up here. Okay, and we only sell one size here. Okay, so medium size, $2.50 here. Okay, that's the price. Okay, the CRV for that, I set it at about 5 cents here. Okay, so that's the CRV that's being collected. That's the California redemption value. Okay, in a lot of the situation when you're selling can or bottle beverages, especially sodas, okay, you need to track that CRV separately. So when you run the reports, it should break that down into a CRV category. Okay, and I'll show you that later there. Okay. Now the tax rule is, let me go here, always taxable. Okay, so it's going to tax that no matter what, even if they dine in or they dine out. Now you'll see here that it doesn't have that option here where it says dine in, dine out. That's actually in the menu or the order section. Okay, the customer or you will set that. Okay, so let me save this. I will update this item. And let's do one more here. Let's do the banh mi sandwich here. Okay, so I'm gonna click on the image so you can see that. Okay, okay, and let's close that. Let's click on edit here. So we're gonna set this here. Okay, so we only sell one size, is the large size. Okay, this is a cold food item. Okay, it's not served hot. We make it, it's cold. Okay, now the tax rule is it's gonna be, it depends on the dine-in then. Okay, if they dine in and they eat it there, then it's taxable. If they carry it out, then it's not taxed. So this is where, as the owner, you get to choose. Okay, and I'm not telling you that it's always taxable or it's never taxable. It depends on the dine in or carry out. In this example, I'm using the depends on the dine in. Okay, we're gonna go down here and then description, tags, ingredients. Okay, spice level, you can set that. Dietary, you can set that as well. Allergens, there's any allergens here. Okay, I'll add eggs here. Okay, tree nuts. Okay, these fields down here are very important, so make sure you select what you need to, especially the tags here as well. Okay, the idea is the more precise you are, the better the web and especially AI can actually scan your menu and give your customer a more accurate ordering list. Okay, so it's very important to make sure you fill all as much information as possible here. Okay, that goes well with this is what is called an upsell. Okay, so for the sandwiches here, I chose that it goes well with cookies, some watermelon drink, sweet tea. We can add a soy coconut, Coke, and some sweet and sour sauce. Okay, so this is what is called upsell right here. It goes well with. This will appear on the menu details. So your customers, when they order this sandwich, it gives them these options too that they can automatically add certain items that goes well with that item. It's called upsell. Okay, so we're gonna update this item here. Okay, I'm gonna exit out of this here, and I'm gonna go back to my ordering site here. Okay, so let me see if I can click it here. I have to move it a little bit here so I can see it. Okay, so I'm gonna go back to my ordering site here. Okay, we're gonna refresh this since we made some changes. Okay, so this is what your customer sees here. Okay, so we're gonna go down to the sandwiches here, and we're gonna click on the photo here. Okay, and you can see here my description, everything falls out here. Okay, allergens. Okay, ingredients and tags. Okay, the tags are very important. It helps the search engines and AI make recommendations to your customer. Goes well with. Okay, this is the upsell section here. Okay, your customers can pick from here as well. So when they're purchasing the sandwiches, let's say let's order 2 of these sandwiches here. Okay, okay, so we order 2 of those. We want 2 of those, and you see it goes well with, so that your customers don't really need to actually go and search out for other items. The items are right there where they can actually make purchases from as well. So they could see this and say, you know what, we want some Asian cake also. Add 2 of those. They want just 1. Click on the minus. Okay, and add some green tea to it. 2 large tea and 1 Coke. Okay, I'm gonna take the Coke off for now. I'm gonna click close here. Okay, so we order 2 sandwiches, and you can see here the dessert here on the dessert sections. It automatically we picked that already from the menu there, and the drinks. Okay, you see I got 2 drinks selected there. Okay, the green tea. Okay, now I'm gonna go down to the drinks here. I'm gonna look at the Coke here. We added a CRV to the Coke. Okay, so let's purchase 1 of those. Okay, okay. So this is where it gets tricky here. The CRV is added to this. Okay, now CRV are always, especially for can and bottles, they're always taxed it. Okay, so this is actually $2.55, then the tax on top of that. Okay, so just be aware of that. Okay, so some of these items here, if I set these to, especially this right here, the total here, okay, I ordered 2 here. We're gonna make it very simple here. I'm gonna take off the other one, and I'm just gonna say 1 here, and I'm gonna go back here, and I'm gonna take off the desserts also. Okay, we'll clear the desserts out here. Okay, I don't want any desserts at all, to make this a lot simpler so you can understand this. Here, the green tea, I'm gonna remove all the green tea. Okay, Coke, let's take that off. Okay, so we'll take off everything. So I have basically just a sandwich here. Okay, now this is where you see the for here or to go. Okay, so this is the dine in here. Default to the customer is going to dine in. You see that there's a tax here. Okay. If I choose to go, the customer wants that cold sandwich to go, there's no tax applied to it. Okay, and the total is $675. But if they have it there, you see the tax gets applied and it's $731 now. Okay, so I'll toggle this back and forth so you can see the difference here. You see how that works? So you set that inside the menu, okay, your tax rules, okay, and then it applies that to the order page, okay. Once again, the only thing that we're ordering right now is just one of the cold sandwich here, okay, and we set the tax rules for here is taxed it, okay, they're gonna eat it here, okay, at the place of business. To go, there's no tax, okay. So I can toggle that back and forth so you can see it change there. Okay. Okay. So set your tax rules. Okay. Set your tax rules correctly here, and your customers, they never really see it. Okay. The app automatically applies to it. It automatically knows that this particular item is going to be taxed if they have it there, or they consume the product there, or it's to go, there's no tax. So you get to make that decision. We don't make that decision for you. Okay, so once again, make sure you talk to your tax attorney or your accountant so you can set your taxes correctly. And this goes back to the 80/80 rules and all the other little quirky rules that California has. Okay. Okay, so once again, I'll toggle that so you can see it. Once we set the tax rules, we don't really have to mess with the taxes anymore. Okay, that particular item is set. Okay. All right. Very similarly, okay, if you are placing manual orders inside the app, there's a manual in the admin dashboard here. This is where you see all your pending orders and all your completed orders, okay? So I'm gonna go here. I have 3 pending orders here. I'm just gonna mark these all paid and pick up so we don't have any more here, okay? So you can see we don't have any more pending orders here, okay? So if I click on manual order, this is where you, your employee or yourself, you can place manual order here, okay? And very similarly, if I go to the sandwiches, okay, you'll see the very same thing here, okay? You can place the order here, or you can place it right off here, okay? And go down to the bottom here as well, okay? You can see that there. To go, no tax. For here, there's a tax, okay? So other than that, once again, you close that out and close out the manual order here, the menu section, menu configuration, and scroll down to all your items here. I have a bunch of items here, 22 items, okay? On your, if you're using this on your regular normal computer, all the items will be on the left side of your screen, so it's a lot easier to see. Okay, I have to minimize this screen so that it would appear, everything will appear larger on the training video. Okay, other than that, that would be it for this particular training, and I hope you learned something. This is for advanced CRV and tax settings for your menu items. Okay, and we'll go back to here. Okay, and oh, I forgot one more thing. Let's go into the reports. I mentioned that earlier, which I almost forgot. The report section. Okay, you can export also. This is the general report here. It'll show you everything, all the CRV collected from pick. You can pick the date, start date, end date, by quarter, by year, by week, by month. It's up to you. Click on the calendar and pick the dates. Generate your report here. Okay, and you can see all the CRV charges, discounts, and etc. So if you're not sure about discounts, there's the discount is on the order side as well. So for example, if I go back to here, okay, once the customer orders something here, let me use the manual order, so it's a lot quicker. Okay, and we're just gonna pick one sandwich, and they're gonna eat it there. It's gonna be, I'll use Lily. I'll just put a phone number here, lily@com, Fresno, Cal, something there. They can opt in. Okay. So you can see here, if I go back to my dashboard here, we got one pending order here. Okay, so if you want to give your customer a discount here, you can add charge or discount. And I can say you can put this discount. Okay, use negative numbers. Okay, negative numbers, it means a discount. Okay, so if we put negative, I don't know, $5. Okay, save change. Okay, you can see the new total for Lily's order here. This is the new total here now. Okay, and it'll show you the discount and the receipt here. Okay. Other than that, the export report, this is for yourself or your accountant. You can, I'm just use these default date here, low orders. You could download the CSV file. Okay, it gives you a general idea of what it looks like here. And there's a lot of fields here. You can scroll, keep scrolling to the right. You can see the CRV here per order. Okay, and towards the bottom, it's gonna, let me go down to the bottom there. It'll sum it up on the bottom as well. Okay, total orders, completed orders. Okay, so to get that into a CSV file, you can download that, and then you can sort and filter all the different types of orders, all the discounts, all the CRVs, all the dine in, dine out orders, and etc. there. Okay. Well, we will go here. Let me scroll to the right here. Okay, you can see the dine in to go here, and go down to the bottom so you can see it here. For here, for here. You see it to go. Okay. Close out of that. I'll close out of that, and that would be it for this training. This training was quite long because there was quite a few things to go over. So I hope you picked up some general information. And if you were just to remember this right here, I think you gained something today. Other than that, always remember, we are not tax attorneys. So consult your tax attorney and consult your accountants to see what you can tax, what you shouldn't tax. Okay. Every state is different. I just cover basically California's rules today. So if you're in Oregon, Washington, Minnesota, North Carolina, somewhere else, double check your state's tax requirements. Other than that, thank you for attending the training, and I will see you in the next one.